1. A $100,000 whole life policy with a waiver of premium rider and $30,000 of cash value is in force when the insured dies at age 65. The beneficiary receives how much of the policy's values? $100,000. 2. Which payment option pays an income for the life of the annuitant or for a specified period, whichever is longest? Life income with period certain. 3. Paul is the insured and policy owner. Paul named Danny and Kayla as co-primary beneficiaries of Paul's $100,000 policy. Danny is to receive 70% and Kayla is to receive 30%, therefore, Danny gets a certain amount of dollar and Kayla also gets when Paul dies. $70,000 and $30,000. 4. What happens to a life insurance policy if a premium due is not paid before the end of the grace period? The policy lapses. 5. Which of the following personal uses of life insurance is specifically designed to benefit the policy owner while the insured is still alive? Cash accumulation. 6. Which of the following types of life insurance coverage is best used to protect the beneficiary and to provide a living benefit for the policy owner? Permanent. 7. Which two adjustments are usually made to the cash value account in a universal life policy? Cost of insurance protection is charged, and the current interest is credited. 8. Which of the following terms can be defined as deliberate deception with intent to gain? Fraud. 9. Which of the following policy types is written on the life of a minor? Juvenile life. 10. All employer-paid premiums for group life insurance are reported as taxable income to the employee if they are over $50,000. 11. In what interest rate environments is a bailout provision most likely to be exercised by the annuity owner? Falling interest rates. 12. If money is paid when a change of ownership in a life insurance policy takes place, this is generally known as a transfer for value. 13. If Robert wishes to cash out his annuity at age 70 after having it for over 40 years, what should he know about prior to doing it? The amount of tax-deferred earnings will now become taxable. 14. Which of the following policies does not end when the insured dies? Joint survivorship. 15. D. An unlicensed individual in the state of Washington is conducting insurance business. Because they are conducting insurance business without the proper license, they are guilty of which penalty? Misdemeanor. 16. A grandparent purchases a jumping juvenile policy for their 5-year-old grandchild. When the child reaches age 21, the grandparent presents the policy as a gift. All of the following statements are correct, except the beneficiary must change when policy ownership changes. 17. Which of the following IRA transactions is subject to taxation? An IRA rollover reinvested 75 days after receipt. 18. The surrender charge schedule for a variable universal life policy generally does which of the following over time? Decrease. 19. When calculating premiums of life insurance policies, insurers assume all of the following except the actual life expectancy of each group of insureds. 20. Which of the following term life insurance policies would have the highest annual premium, all other factors being equal? 15-year term. 21. Which of the following is included in Part 1 of a life insurance application? Name and occupation. 22. Universal life and variable universal life share all of the following characteristics, except investment risks. These differ. 23. Unless otherwise determined by state law, life insurance policies generally cannot be backdated more than how many months? 6 months. 24. All of the following are characteristics of universal life insurance, except the policy owner can choose which investments to place the cash values into. That describes variable universal life. 25. James is nearing retirement and has accumulated $175,000 in an annuity. He wants the largest possible monthly benefit for as long as he lives. Which option should he choose? Life income. 26. An insurer in Washington is engaged in an insurance transaction regarding group life insurance, in which coverage applies to a Washington resident, but the policy will be delivered to a non-resident policyholder. Which of the following practices is considered an unfair practice? Delivering the required disclosure statement within 10 days after policy issuance, instead of before or on time. 27. J is the insured and their spouse. M is the primary beneficiary. Their 3 children are the contingent beneficiaries. J and M are killed in a common accident. The proceeds of J's policy would be paid to the children. 28. An insurer in Washington is renewing an insurance policy. Notice of the amount of premium required to renew the policy must be delivered to the insured at least 30 days prior to the policy's expiration date. 29. At the time of application for life insurance, an insurable interest must exist between the applicant and the insured. 30. Life insurance protection for a specified period of time is provided by what type of policy? Term life policy. 31. After determining the required amount of needed life insurance using the needs analysis approach, what is subtracted to determine the final amount of insurance needed? Any available assets or investments. 32. Individual term policies are generally standalone policies, but may be written with other types of policies as rider. 33. Generally, children receive Social Security survivor benefits until age 18. 34. How can an annuity help fund college for a child or grandchild in a tax-efficient and effective manner? Through systematic withdrawals or appropriate settlement option selection. 35. If a life insurance beneficiary has the choice and is interested in capital conservation, which of the following settlement options best meets the beneficiary's needs? Interest only. 36. J is the beneficiary of a life insurance policy and has selected a life income 10-year period certain. What happens to the income payments if J dies in year 4 after starting to receive income benefit payments? Payments continue for the balance of the period, certain to a named beneficiary. 37. A buy-sell agreement is a business continuation plan, and if it were not in place, all of the following could happen, except the estate transfer may be sped up due to emergency business liquidation. 38. What date is the date on which the insurance coverage ends? Expiration date. 39. M. A producer has a newly issued policy for the insured. M went to the insured's home to collect the initial premium and deliver the policy. M discovered that the insured was in the hospital with a heart condition, pending surgery. What should M do with the policy? Return the policy to the insurer with a letter of explanation. 40. If an applicant is a minor, who signs the application on the minor's behalf? Their guardian. 41. K has a $50,000 traditional whole life policy in force with $25,000 of cash values. The policy has been in force for several years, and the surrender charge has disappeared. K's outstanding loan and loan interest total $5,000. If K surrenders the policy, K will receive $20,000. 42. What is the easiest and best way to ensure that the life insurance policy's death proceeds do not end up in the probate court process? List a primary and contingent beneficiary by their full name and relationship to the insured. 43. Which type of risk involves gambling, such as placing a bet or playing at a casino? Speculative risk. 44. To encourage annuity holders to leave funds in the policy until retirement, insurance companies can assess blank for withdrawals. Surrender charge. 45. Which life policy settlement option pays only for a specified period, regardless of who may receive the payments? Fixed period. 46. The life insurance non-forfeiture option that provides coverage for the shortest duration is extended term. 47. Q has a $100,000 traditional whole life policy with $30,000 of cash values and a $10,000 loan outstanding. What is the maximum additional amount Q could borrow from the policy at this time? $20,000. 48. Unlike riders, life insurance provisions and clauses are included in the contract for no additional charge. 49. All of the following are traditional whole life policy non-forfeiture values, except renewable and convertible features. 50. If an insured currently has a policy with a waiver of premium rider and should change to a more hazardous occupation, the insurance company will continue the waiver of the premium rider. 51. B. A life insurance policyholder is late on their premium payments. According to the grace period provision, how long does B have to pay their late premiums while keeping their policy in force? 30 days. 52. Which of the following gives the owner of a variable annuity the right to withdraw funds without having to annuitize? Guaranteed minimum withdrawal benefit. 53. A mother with a teenage son purchases a life policy on his life. The policy includes an optional rider called the payer benefit. What will happen to the policy if the mother dies or is disabled before her son reaches age of majority? The premiums on the son's policy are waived until the son reaches the specified age. 54. Who can surrender an annuity? Owner. 55. All of the following can determine the life insurance death benefit settlement option, except the insurer. 56. Which provision allows an insurer to borrow from the cash value of a policy in order to pay premiums due and prevent a lapse in coverage? Automatic premium loan. 57. Which of the following is considered a partial withdrawal from a life insurance policy? Partial surrender. 58. A universal life policy may be surrendered for its cash value at any time. 59. In Washington, all of the following causes of death would allow an insurer to limit their liability in a life insurance policy, annuity, or pure endowment, except dread disease. 60. Which of the following is true regarding indexed annuities? Values and benefits may increase, but not decrease. 61. If the beneficiary is concerned about a payout for a particular period of time, which settlement option should be selected? Fixed period. 62. In Washington, if an insurance producer charges a fee for working with an insured, the producer must disclose in writing to the insured the full amount of the fee, along with the amount of commission paid to the insurer. This document is called Producer's Compensation Disclosure. 63. An insurer that has not received permission from an insurance commissioner to do business in their state is called non-admitted insurer. 64. In those instances in which the death of a valued employee could cause financial hardship for a company, the company might acquire additional funds through which type of coverage? Key person coverage. 65. Universal Life provides for an increasing death benefit only if the applicant chooses death benefit option B. 66. The primary categories of Social Security benefits provided are retirement, death, and survivor benefits. 67. Which of the following permanent life insurance policies allows for flexibility but, in some situations, can perform like term life insurance? Adjustable life. 68. An individual can purchase a life insurance policy on all of the following persons, except their neighbor. 69. Under the law of agency, apparent authority is the general appearance that authority exists. 70. A licensee is placed on probation by the commissioner. The commissioner may require T to do all of the following, except return their license to the commissioner for the duration of the probation period. 71. Which type of insurance allows for insurance coverage to be obtained when not available from admitted carriers? Surplus lines. 72. If an insurer accepts an overdue premium payment and continues the policy uninterrupted, this is an example of waiver. 73. What unincorporated organization is formed by individuals, firms, and business corporations to exchange insurance on one another's risks, with members known as subscribers? Reciprocal insurance company. 74. An insurer issued policies with different terms and premiums between two individuals who had substantially like risks, exposure factors, and expense elements. This is an example of which unfair trade practice? Discrimination. 75. The commissioner finds that T, a producer in Washington, does not have a license for one of the lines of insurance they are selling. T may be issued any of the following penalties by the commissioner, except issue a sentence of imprisonment for up to 12 months. 76. An applicant intentionally withheld information about their smoking habits when applying for life insurance. This information would have changed the insurer's underwriting or rating decision. Which of the following actions did the applicant perform by withholding this information? Concealment. 77. All of the following are elements of a contract except authority. 78. How would a business entity terminate an affiliation of an insurance producer or surplus line broker? Submitting a form through the commissioner's website. 79. Which of the following statements regarding a producer's license in Washington is correct? A producer must hold a license in the line of authority they intend to sell. 80. Premiums or return premiums received by a producer or broker must be promptly accounted for and paid to the entitled insured, insurer, or producer because they are received in what capacity? Fiduciary capacity. 81. Under what conditions, if any, may an individual that is not licensed be compensated for the sale of insurance? If the individual was licensed at the time of sale and receives deferred commissions while unlicensed. 82. Which of the following disclosure standards must be followed during the sale of a life insurance policy in Washington? Before making any sales presentation, producers must inform prospective buyers that they are acting as life insurance producers. 83. Unless it cannot be reasonably completed, insurers in Washington must complete claim investigations within how many days after receiving notice of the claim? 30 days. 84. Licensees must notify the commissioner of any change of a mailing, residential, business, or email address within how many days? 10 days. 85. J. A producer in the state of Washington offers to return part of the initial premium to an applicant, B, if B agrees to purchase the policy, even though the return of premium is not included in the contract. J is guilty of which unfair trade practice? Rebating and inducements. 86. In the state of Washington, for how long is a business license valid? 2 years. 87. While comparing a consumer's current insurance policy to a new policy offered by a different insurer in Washington, producer G intentionally misrepresents the terms of the new policy to make it more favorable, hoping to convince the consumer to cancel their current policy and purchase the new one. This is best known as an example of twisting. 88. Under an employee group life insurance plan in Washington, how many employees must be covered at the date of issue in order to be valid? At least 2 employees. 89. How long does the commissioner have to verify or deny the producer's eligibility for an appointment after an insurer submits a request and pays their fee? 15 days. 90. Unless the policy was issued as part of a replacement sale, a policy owner in Washington may return the life policy if unsatisfied for any reason within how many days after receiving the policy? 10 days. 91. What is the funding source for the Washington Life and Disability Insurance Guarantee Association to pay covered claims of insolvent insurance companies? Assessments against member insurers. 92. Exemptions to the replacement regulations in Washington apply to all of the following, except annuities. 93. A person must complete a one-time course in annuity suitability before being allowed to sell, solicit, or negotiate the sale of any annuity product in the state of Washington. How long must the course be? For hours. 94. Resident producer applicants in Washington must meet the following conditions, except they must be at least 21 years of age. 95. Where must a producer in Washington display their license or licenses? In a conspicuous place in an area of the business that is customarily open to the public. 96. ABC Insurer has a certificate of authority to transact business in Washington and wants to appoint K, a licensed insurance agent, to represent the company. The company must notify the commissioner in writing and pay the appointment fee within how many days of the agency contract's execution date? 15 days. 97. K, a producer in Washington, has distributed information to their clients that is false and designed to injure another insurer. K is guilty of which unfair trade practice? Defamation of insurer. 98. Which of the following policies is least likely to keep pace with inflation? A fixed life policy. 99. Generally, which of the following annuities is not designed to guarantee the principal value of the policy in stable interest rate environments? Variable annuity. 100. D. A producer in the state of Washington was very busy and did not get a receipt for payment of premium to their client for 2 weeks after the client's premium payment. D is guilty of which unfair claims practice? Failure to issue proper receipts.